Hello traders, welcome to this video. In this particular video, we are going to be discussing the BTST strategy. The BTST strategy, which is short for buy today, sell tomorrow strategy. So basically, this strategy is usually used for stocks. It is a stock-based strategy, and this strategy, the buy today, sell tomorrow trading strategy, involves purchasing stocks at the end of the market day and selling them the next day. So basically, that is how the strategy works. Now, the goal is to capitalize on overnight price movements, overnight price movements, which are often driven by news or earning reports or market sentiment shifts. This short-term trading approach is popular among traders, especially those who are looking for quick gains, and it works well in highly liquid stocks. That is the reason why we are using the Apple as our example. Highly, highly liquid stocks such as the Apple, Facebook, and the rest. Okay, so here is a breakdown of how BTST strategy works and how you can use it to find profitable opportunities. Now, basically, the BTST strategy involves buying near market close. So, for example, if we were to use the BTST strategy, we would have been looking at buying just before the market closed on this day. Just before the market closed, we would have been looking at buying here, somewhere around here. Normally, traders typically buy a stock toward the end of the trading session, that is just before the market closes, in anticipation of positive news, trends, or technical signals. Basically, that is how it works. Okay, and these signals or trends may cause the stock price to rise the next day. Now, let us just do a little analysis. Remember that this strategy does not guarantee profit, right? So we are going to just look at a few examples. Now, had it been we had bought at the end of this trading day, we would have seen some profits at the start of the next day because the price jumped to this point before it began to sell. And the BTST strategy works in such a way that the trade ought to be closed the next morning. The next morning, traders sell the stock during the early market hours to take advantage of any price increase that occurred overnight, avoiding extended holding periods and limiting exposure to market volatility. So basically, when the price of the stock is nearing towards the end of the market day, or basically when the end of the trading day is nearby, the traders will buy the stock. It is an overnight trading strategy in anticipation of a positive event that will cause the price of the stock to have increased by the next morning. So had it been we had used the BTST strategy here, we would have seen a price increase the next morning, early hours of the next morning, and we would have sold in profit. Perhaps we would have set our stop loss below this swing low, and early in the morning, we will take our profit. Meanwhile, we could have also considered setting a take profit at the nearest resistance because there is a resistance level around here. So we would have considered setting our take profit at that resistance. So perhaps in the morning we would have already seen our trade closed in profit. Let us look at another example. So we can see another example here. Had it been we had bought this stock towards the end of the market day, we would have seen a profit in the morning, early hours of the morning, because the stock, although the stock dipped first. So in this case, I guess this one did not exactly go as the traders would have anticipated because the stock dipped before finally going up. Remember that this strategy does not guarantee profit, so you have to be sure that it is a strategy that suits your trading style before you decide to use it. Now let us look at another example. Here we can see that right after the market closed, early in the morning, the price went up. So had it been we had bought towards the end of the market day, in the morning we would have seen some profit as well. Now, the step-by-step process for using the buy today, sell tomorrow strategy is you have to choose liquid stocks such as the Apple and the Facebook. These are some of the liquid stocks, Tesla and the rest, Microsoft that we have, right? Now, you have to focus on highly liquid stocks that have significant trading volumes. This ensures smoother trade execution and it minimizes the risk of slippage when entering or exiting positions, right? Now, secondly, you need to analyze the news and sentiment. You need to check for any market news, earnings reports, or industry updates that could impact the stock's price. Positive news overnight can create a gap up, just like how we saw here. Positive news overnight can create a gap. There was a gap here before the price began to decline. Here there was a gap. The price jumped down and then it continued to decline. Here we can see a very significant gap. So these are some of the occurrences that happen in the stock market, right? So now positive news overnight can create that gap, these gaps that we just identified. And thirdly, after these gaps have been created, it creates an ideal opportunity for a BTST trade, right? Because if you buy before the end of the market day and in the morning you see a gap, automatically you've already made some profit. So you can just close your trade in profit. If, for example, we bought here and in the morning we just see a gap, a price jump, we're already in some serious profit. So next to look out for is it is always good to also make use of technical indicators to help you identify good BTST trades. Now, we can decide to employ the use of RSI. The RSI can help us to look for stocks, um, to identify stocks that are either towards the overbought level or oversold level. The RSI is a momentum indicator. So with RSI, we need to look for stocks that have an RSI reading between 30 and 50. Let us just open the RSI. Let's open the RSI. So between 30 and 50, okay, the default settings is 30, 70. We can just set another level, 50, right? So now we need to look for stocks, or we need to wait for a period when the price of the stock is at a position where the RSI reading is between 30 and 50. For example, here now, we can see that the RSI reading was between 30 and 50. So this would have been a good opportunity to buy the stock. And in the morning, you can see that there was later a price increase, right? And then this is another place. You can see that the RSI reading was between 30 and 50 towards the end of the trading day. and in the morning there was a price increase. Now this is another example between 30 and 50 we can see, and in the morning there was a price increase. So the RSI is an indicator that helps in this BTST strategy. It is one of the indicators you would want to have in your trading toolbox if you are using the BTST strategy. Now, secondly, another indicator that traders can use when using the BTST strategy is the moving average. You can use moving averages like the 9 moving average, 9 SMA, 20-day SMA. Let us just use the 9, and let us also add the 20-day SMA as well. So now when using the moving average, you have to be looking out for when the stocks will cross above the short-term moving average. You know, the short term is the 9. We are currently using 9 and 20. So the 9 is the red and 20 is the black, right? Navy blue. So you have to wait for the stock price to cross above the moving average. When the stock price crosses above the moving average, it signals a bullish momentum. So for example, we can see that here, as the price of Apple crossed above the moving average, it would have been a good opportunity to buy, and it coincides with the RSI value between 30 and 50. So this is a good opportunity to buy as we have this confluence, right? So had it been we had bought here, we would have set our stop loss just below this support level, and in the morning after the price jump, we would have taken our profit. Now using another example, as the price of the asset goes above the moving average, this would have been another opportunity to buy. It would have been another opportunity to buy. Now, this is another example. This is another example. The price of the asset goes above the moving average, although it was above the 9 moving average, but it was later on that it goes above the 20. But for this strategy, it is better to use the smaller moving average, such as the 9 moving average. So as the price rose above the 9 moving average, let's just remove the 20. So as the price rose above the 9 moving average, we can see that the next day there was a price jump and we would have taken our profit, right? Now, another indicator that traders use for confirmation is the volume indicator. Now, a stock with rising volume near the market close could indicate growing interest and a potential price increase the next day. The next day. So, if you are using the volume indicator, just added the volume indicator right now. You may want to look out for an increased volume right before the end of that market day, right before the end of that trading day. So if we have an increased volume, it could be a good opportunity to buy. It could be a good opportunity to buy. So something around here, okay, this was a sell candle, so it wouldn't have been a good opportunity to buy at this point. Okay, you can see. Okay, this is a good example. This is a good example here. You can see the volume, the length of this volume indicator shows that there was rising volume in the stock. There was an increase in volume for the stock, so it would have been a good opportunity to buy. And we can see that it also coincides with the moving average as the price of the asset was above the moving average, and at the same time it coincides with the RSI, which was between 30 and 50. So we have a confluence here. Would have been a very good opportunity to buy. And we can see that the next day the price increased. Right. So now another step to take after using these technical indicators is to monitor pre-market activity. You will want to monitor pre-market activity. Before the market opens the next day, you want to make sure to check the pre-market trading activity. This can give you an early indication of whether the stock is set for a strong open or not. So not just waiting for the end of the day, you should also analyze how the stock moved during that trading day. How did the stock react during that trading day? It can give you an indication of where the stock is headed the next day, right? Now, you also need to make sure that you observe good risk management. It's very important, and don't forget to use stop losses. Don't forget to use stop losses to minimize your losses. Peradventure the trade goes against you, right? So now just a brief recap for our entry and exit points. Our entry point is before the market closes. That is where our entry point is going to be. The BTST strategy is such that the entry point is just right before the market closes. And then you have to time your entry when you see a bullish signal. We have already identified indicators that can give us signals such as the RSI, the volume, and the moving average. When you find a bullish signal, then you have to time your entry and pick up the trade toward the end of the day. Now, as for your exit, just plan to sell within the first 30 minutes to 1 hour of the market open the next day. So within 30 minutes to 1 hour the next day, you should be exiting your trade. Try as much as possible to avoid holding longer because the price might reverse or volatility could increase. Now, let us look at the common mistakes to avoid when using the BTST strategy. Number one, try to ignore market do not ignore market sentiment. Sorry. Ignoring market sentiment is a mistake that traders need to avoid. Always factor in broader market trends and sentiment. Always factor in broader market trends and sentiment. Even if a stock strong technically, a bad news event or market crash can result in losses. So do not just base your judgment only on the technicals. Try as much as possible to observe the market sentiment. What is the sentiment concerning that stock? What are the news surrounding that stock at a given point in time? Did any significant news happen? Was there any positive developments? Was there any negative developments? You can be able to use that to determine the direction of that stock. Do not use only the indicators, do not use only price movement. Put into consideration market sentiment, right? Secondly, overtrading low volume stocks. Try and stay away from that. Stay away from low volume stocks. We want to be focusing on high liquid stocks. We want to focus on high volume stocks. High volume stocks such as the Apple, the Facebook, or Meta, the Microsoft, and the rest of them. You can focus only on stocks with high volatility of high volume. High volume. Stocks with high volume are ideal for the BTST strategy. Low volume stocks can be harder to exit quickly and you may experience sharp price drops due to low liquidity. So try to avoid them. Number three, do not for any reason fail to set stop loss. Very, very important. Although BTST is a short-term strategy, it is very important to manage your risk. If the stock gaps down instead of up, you should face losses. So that's the reason why it's good to set your stop loss before the end of that market day. Once you enter your buy trade, ensure to set your stop loss just below the swing low so that in case of if the price gaps down, you would close in a calculated loss. You don't end up losing more than you budgeted. So that's why it's good to set stop loss, right? Now, the fourth mistake that you should avoid is chasing after news. Do not buy into a hype. Do not buy into a hype. If everyone is already talking about a stock, then the price might be inflated already, leaving little room for a profit the next day. It's often better to trade on fresh, lesser known information. So do not jump into buying a stock when there is already news about it and the stock is already reacting to the news. Do not jump in late. Do not allow the fear of missing out to cause you to jump in late when a stock has already made its move. Okay, it's very important to avoid chasing after news. Now, basically, that is all for the BTST strategy, the buy today, sell tomorrow strategy. By following these steps and avoiding the common pitfalls, BTST strategy can be a good strategy which you can implement if you are comfortable with its principles. It is basically for short-term traders who are looking to capture overnight market movements. Now, it is very important that you stay disciplined with your entry and exit points and make sure you have a solid risk management in place. It's very, very important. So that is it for the BTSD strategy, guys. I hope you found this video insightful. Kindly like, subscribe, and hit the notification button. Hit the notification button to get updated on subsequent videos. So cheers, guys. I'm happy trading.